Today we're talking about putting together a deal package. For us, this is something that we do for every deal as it starts to moving in the right direction, and we need to start communicating the information of the deal to certain partners, whether that be investors or really just investors. So obviously, investors' time is valuable, and they don't need to look at every single assumption. They don't need to dive into all parts of the underwriting or the deal presentation. You don't have to have a full pitch deck or have the property under contract before you start sharing information. But it is kind of, where do you draw the line of as far as sharing too much or too little, coming off as unprofessional or just kind of overloading somebody and then they just tune it out. So that's why we're trying to always improve this process and streamline it for ourselves and for our investors so that we can get, the quickest response and hopefully the response we're looking for, which is a yes. And, the way we think the way to do that is to present the information, within the email clearly and give them the information that they're looking for. And then also this actual package itself, which I'll show in a second, is crucial for them to be able to digest and not have to come back to you with questions for every single thing. Oh, what about this? Or did you do your homework on that? And so kind of having your ducks in a row obviously looks good, and it minimizes that back and forth. So without further ado, I'm going to share my screen. I've got, so the latest deal we're closing next week, Solano Apartments. I'll just show you kind of the raw. I didn't, prepare any special documents for this. I'm just going to show you the raw folder that we have in there. And, I can kind of take you through our process. It's a kind of an iterative process, right? Because like I said, we don't just put a full pitch deck together from day one. It starts small and then grows over time. So the data room or this pitch package kind of grows over time until we have a full 506B offering and we've got all the documents in place. So I'll kind of share how it grows as well. Okay, so looking at this folder, you can see this is how we organize it with key things, right? Debt is obviously important. So at this point, so also we're looking kind of at the final product, right? And also, by the way, I'm not a fan of these disclaimers. I feel like sometimes people just gratuitously like to throw in their disclaimers because it makes them look more professional. But this is not a solicitation for any investment securities, et cetera. This deal is fully funded, thankfully. I can, that's behind us. So this is a live deal. It's fully complete. So this would be the most fleshed out data room that we have, and you can see what we have in here that we share with our investors. So, for example, some sponsors, take the approach of sharing less with their investors, and I'm not sure exactly why. There's probably a couple reasons, but kind of the benign reason would be, well, I don't want to overload them with information and just keep it simple for them, and that's fair. And we don't blast this data room out to everybody. It kind of goes to people who ask for it or just more sophisticated investors who we know are going to ask for it. But in the debt folder, just kind of going from top to bottom, we've got our loan application in there, so an investor can see all the terms of that deal and actually verify the assumptions we're using on the debt is legit. And also this is helpful at the early stages of a deal, pre-contract, right? Because it's not the easiest thing to convince an investor to spend a lot of time doing their homework on a deal that you don't have control of. And you can burn out an investor, or you can kind of strain that relationship if you send a bunch of deals. And then if you're lucky enough to actually have an investor who's excited about it, and then you can't actually deliver on it because you don't have control, that is not fun, right? We're used to having the deal but no money. So when you have the money but no deal, it's potentially even worse. So debt information. Next is obviously property level financials. So here we just have the rent roll and T12 organized, right? Keep it handy, obviously, if they're going to underwrite the deal themselves. Insurance. So for us doing deals in Texas, kind of the two big expense hot buttons, I'm sure it is the case in many other places as well, is insurance and property taxes. So we have our insurance folder, which hey, we've done our homework. That was kind of the point that I guess I didn't finish, right? When you don't have a deal under control, how do you, show an investor that this is something real, this is actionable, you're working on it, right? Well, if you have a term sheet or, at least a quote, and you've got the insurance quoted, right? It's more of a real deal. It's quantitative. It's actionable, and that looks better than just saying, hey, here's the OM from the broker, and what do you think about this deal? All right, they might as well just buy it then themselves because you haven't done any homework for them. So now here, this investment presentation, like I said, I'll just quickly do a preview view, right? This is our full pitch deck, and this takes a lot of time to produce, and you got to have a lot of homework done already to get to this point. So obviously when we're initially going out, we don't have that. So I'll show you what we do have instead, which is our memo, which is our standard 1-2 page template that we use to just quickly get information. And Charles, our director of acquisitions, can put together a memo, I don't know, 3 hours or something like that. So we can have a memo ready really fast and then get that out to investors and start getting feedback on the deal and not waste all this time putting a presentation together and all that stuff. So legal, right? Again, this is also a component that only exists once you're far down the line. So for us legal here, this is our offering documents, wiring instructions. That's the full thing there, but that's nice to have investor, because no matter how many times you tell investors that the wiring instructions are in the investment portal, they're going to ask you, what are the wiring instructions? So it's nice if you have them here. They'll probably still ask for them, but then at least you've got a handy place for all your stuff and you can quickly point to it. Market research, right? How are you justifying your numbers, or how are you deriving your numbers in your underwriting? Definitely a good portion of that is market research. So here we just have a single CoStar report. Internally, we pull multiple CoStar reports. We obviously have different research, so sometimes we'll have more stuff in here, but there's always going to be people that ask for a CoStar report or some sort of report, so it's just good to already have here. Property taxes. So like I said, for Texas, it's a very wild expense that can really kind of surprise you, and savvy investors know this, so they don't want to be surprised by it. So we have our property tax consultant put together an equal and uniform analysis so that we have a good understanding of where the taxes are going to trend, and then that we can justify that in our underwriting, right? Because investors are always asking, okay, well, the taxes are here right now, but where are they going, and how do you know that? So because obviously you have to make some determination in your model, and it's good to be able to justify it. And then lastly, we just have the underwriting. So underwriting model, which obviously takes in all that stuff, captures it into a quantitative format, and that's very important, obviously, for many people. So that real quickly is the data room there. But this is kind of a step further. So we're going to work backwards, right? So this is the full complete data room. Now we'll kind of rewind back to what would just kind of be in just a debt package. So I'm just going to go one step backwards, and pre-presentation, right, we'll have an investment memo. And I'll show you what it looks like. I've made a webinar before about this memo. So if you want to look at that, you can go check that out on our YouTube channel and get kind of my full rundown of the memo. But just for the purposes of today, this is just a mini presentation. And I think this is really nice to put together and separates you from others who are just kind of throwing a bunch of numbers and miscellaneous files at someone and saying, here, please digest all of this, right? Because if you have an investor who maybe doesn't want to go granular, right? They just want the high level, you're giving them it here. And they can understand the story and kind of start picturing the deal aside from just the numbers. So I'll quickly run through the components of this, but but it's literally, these components need to be in your pitch deck as well. So the way that we do it is we put this together. If the deal actually has legs and we're going forward, then we'll essentially take this memo and obviously add to it because we've at that point learned more about the deal. But the core fundamentals of what goes into this memo is what is then used to build out the pitch deck. So number one for me, the story, that is really important. Understanding how did this deal come about, right? Investors are always asking, well, is it off market, on market? Who's a seller? Why are they selling? So the story is super important to me. Obviously, the market's a big component. The business plan, right? The pricing, the debt, what's the value add strategy? Is it a lease up? Is it a management play? What do the renovations look like? What are you planning to sell it for? So the business plan highlights, and then the risk. So that's really, just a quick and easy memo, and that encapsulates all of our, quantitative and qualitative information about the deal. So that goes, the core building blocks of our deal package is going to be the memo, the raw financials, the underwriting, market report, and if we have additional things, right, going back to our finalized, going back to our finalized version, right, if we are at that point where we actually do have our property tax consultant engaged, then we can include that as well. If we don't, then we don't. If we have insurance indication, or we always pull the flood map, we can include that information. But as much as we have, the better. But really, the key components would be the memo, the underwriting, and the financials, and throw in the market research, assuming you have access to some sort of data provider. So, yep, in about 10 minutes, that was a quick rundown of the pitch package. I'll stop there because I went pretty fast, and just see if there's any questions, or if it'd be helpful to go over anything there in more detail.
Hey, Rob, do you use the memo as like a pre-marketing tool prior to a webinar for the pitch deck? And is that sometimes created before the full underwriting is done? I think you might have touched on that already.
No, I didn't. So that's interesting. So the memo is after the underwriting. So the memo kind of is in part a summary of the underwriting, and yeah, definitely comes later. And this is actually a good point as well, because one thing we learned this last go around, as an investor pointed out to me, we had the memo and the full presentation in our data room, and so he was looking at both, and there were discrepancies because the memo was created before, and then things had changed in the way we were underwriting the deal, and so the numbers didn't add up. And obviously, whenever numbers don't add up, that never looks good. So after having that discussion with that investor, we realized, it probably is the better move to just remove the memo once the pitch deck is created. We kind of thought more is better. Let's just include both. Maybe someone wants the quick memo, but it's just more things for us to manage. And at the end of the day, if someone wants to get a quick one-page look, they can just skim through the pitch deck, as many people do, right? I think pitch decks are purposely bulky and just have a lot of extra pages, a lot of pictures, and just to give that appearance of bulk and weight, substantialness. But really, all the information in the pitch deck is largely just that little quick memo. Maybe fleshed out further, but that's really pretty much it. And you can explain a deal in 5 minutes. But I'm getting off track. So yes, that's that process. And yeah, I wanted to make sure that I mentioned the fact that this time around we did learn that moving forward we're going to have the memo, but then the second we have the pitch deck created, then it's a replacement, not an addition. So Kenneth asked about what do we do about estimating cost seg. So we don't do any kind of high level estimates. We know we're going to do a cost seg, and so once we close, within the first couple of weeks we do it. But we don't have any estimation, which I would say is probably not the best, because a lot of investors want to see that, and a lot of sponsors use tax benefits obviously as a selling point, and so why not take that selling point and make it more, transparent or in your face? To, here it is, here's the estimate. So that's a good question. That would be something interesting to do, actually, and add it into this data room. I'll actually make a note about that. Thank you very much. So okay, so what is included in the insurance folder? So in this particular one here, we just have the flood map. Because typically you don't have, I mean, you can, we typically do, if we have a quote, we'll include it there. For whatever reason, we don't have our quote in here, but flood map and the quote is what you would put in the insurance folder. Cool. So let me take a peek here. I'm just a little scared showing just the raw folder that we've got going on in here, but so be it. Something else that is going to be added to this data room, and this is a work in progress, is a Q&A or an FAQ. So actually, what we have here in this folder, I'll just go into it, is we started creating an archive for all the emails, because obviously you get a ton of investor emails, right? This question, this question, this question, and not always, but there's a good number of questions that repeat themselves naturally. And so one thing we want to do is obviously we want to be time efficient and we want to be effective. So our plan is to create an FAQ document that has two components. It has a deal specific frequently asked questions, as well as just a company or just generic frequently asked questions. And then that document will be made specifically for each deal that we're doing. So that can be included in our data room. So when we're sharing deal info with investors, oh, by the way, here's all the questions that you're probably going to ask us once you review, and here are the answers. So I think that's helpful and pretty slick. So what we did is, for this deal, I don't think we saved them all, but emails that came in with a fair amount of questions, we just saved those emails here. And then once we get around to it, we're going to actually parse them all and then see kind of what were recurring questions, and so that we can anticipate what frequently asked questions we may receive that are both deal specific and just company specific or generic. And so that way, like I said, we'll have two parts. One part that will just can be used across deals and will always be the same unless the information actually changes, and then deal specific questions about whatever questions come up. Is this property in a flood zone? Are you getting flood insurance? Or what's the story with property taxes, right? So building that, and I think we do have, so we did actually make one here, but we didn't end up sharing or anything, but I'll share it with you guys now. So we created this as just an FAQ, and basic stuff. What is the minimum investment? This and this and this. So we created a few sections here. So I thought this was pretty cool, and I think this will be a nice addition to the data room. And obviously, I mean, if you want to make this, the idea is to make it actually reflective of what is being frequently asked. So be built over time. So the thought is, in our progression of marketing, right? The first email goes out and says, hey, we've got a new deal. Sign up for the webinar. Then the webinar happens. There's going to be questions on the webinar. Save those questions from the webinar and start using them to compile this frequently asked questions. So it's real questions, right? Not just stuff that we're putting together boilerplate. And then obviously the next email that goes out is, hey, thanks for being on the webinar. Here's a recording of the webinar. And then something that we found that people really like, and it was asked of us to do this last time, was to create an underwriting walkthrough. So after the webinar, right, then the next email goes out is, here's an underwriting walkthrough. It just pre-recorded. I could see the argument being made to make that live as well and let people questions be asked on that as well. I don't see anything wrong with that, but it's kind of a lot to ask. Okay, sign up for this live webinar for this deal, then this live webinar. Or another way to go would be to actually just essentially conduct that underwriting walkthrough, which took me about 20 minutes for this last deal. So it should be about a 20-minute video. You could just do that during the actual webinar as well, right? You're presenting the deal, and then you might as well just roll into the numbers. So, but some people get lost in numbers; they don't want to see all that. So that's the argument, to keep them separate. But essentially, right after the recording email goes out, then the underwriting walkthrough goes out, and then maybe a few days or a week later, then you could send out this frequently asked questions. You say, hey, the raise is going well. By the way, here's all the questions we've receiving from all the investors who are just giving us all this money. We've got all these, smart investors asking these questions and giving it money and all this great stuff. Here are the questions for you. And that's just another touch point, and another, way to kind of, I would say, communicate confidence to your investors. So that's another way to utilize this feature. So yeah, that's something that we're playing with and starting out. So that was here as well. Let's see. Any other? I'll stop here just because I'm running out of steam. But any other questions or any other topics that we should tackle while we're on and around this subject?
Yeah, I'm curious. Are you running this in like two parallel rooms, basically? So is the data room maybe in Dropbox and then also in your investment portal? Because you may have people in your investment portal that already have a relationship to you, and then maybe you're also talking to new people who haven't signed on to your portal yet. And then at some point, would you only make this available to the people that actually subscribed, and the Dropbox version would go away?
Yeah, that's a really good point. The integration between the portal and the Dropbox. Obviously, it's cleaner and better if you just push your investors towards the portal and then house all the documents there. And we do have these documents in our portal as well. Not all of them, but key stuff we do. So it is to an extent duplicative. We could look into getting all this uploaded there, and then the Dropbox link would be irrelevant. And then it's kind of like that firewall where, hey, if you want access to this stuff, you need to sign up for our portal. And then uh, that's good to get investors to sign up for the portal. I don't think it's super critical. If you're assuming you're communicating with them by email, you already have their contact info, so you don't need to kind of dangle that carrot and say, well, sign up for the portal, and in exchange for your contact info, you can see the info about the deal. So it is something to consider, for sure. What else I want to say about that? Yeah, and then obviously, kind of where I thought you were going with the question, but not, in the end, was kind of managing the folder, because obviously you have to understand that once you put this link out there, everything is live. And well, yeah. So basically, if you're staging documents or you have rough drafts, right? You obviously don't want rough drafts here. So that's why you kind of have like this equity folder where we're working on stuff, and then the final drafts can get put into this data room that we know is shared and live, and we need to make sure it's in good shape. What else did I want to say about this? Yeah, well, the other thing that's really nice about sharing a Dropbox link is you can live update it. So, because you're just tinkering with your underwriting or tinkering with all sorts of stuff, and if you just send a file and then you update it, then you have to email them again. Oh, here's the updated version. But if you send this link to an investor and then they don't check their email for a week and they come back and you've updated your model 3-4 times, right? They're just going to open this link and they'll go here, and your latest and greatest will be right there. So that's really nice, and essentially kind of automatically handles that.
Hey Rob, after a deal closes, either you get it or not, how long would you maintain this data room in case the deal comes back on, or maybe gets retraded in a couple of years, or you guys start doing the asset management? Like, do you reference this during the asset management phase?
Yeah. So yeah, I like that question. So this this essentially lives on forever, just because, like, let's say the deal doesn't go through and it dies, right? This is just going to sit in our Dropbox, and we'll just move the link will actually break eventually, because just by the way Dropbox works, we'll take this folder, like the whole master folder for this deal, and put it in our archive. And then by moving it to the archive, right, we've changed the location of the file, and so then the file address changes, and now that Dropbox link no longer works. So I mean, it lives on, but an investor would not be able to have access to it just not because of by design, but just because of Dropbox and moving it around in our folder structure. And then your next question about asset management brings up a good topic about investor communication and sharing information with investors. So, if you didn't have an investor portal, then I would highly recommend having a Dropbox link that you updated with asset management information. So if you're doing monthly updates, quarterly reporting, monthly financials or quarterly financials, whatever information you have to share about the property, you just update it to a Dropbox folder. And you can have subfolders of, okay, this quarter report, this quarter, and that's how you would. So what's cool about that is you might send an email out and saying, hey, attached is, or here's the link to our latest latest quarterly report for this deal that you're asset managing. And then when they click the link, they can see all the other folders there, and they want to go back to the quarterly report from 5 quarters ago. It's right there, and they can see the whole set of information. So, but then essentially an investment portal takes care of that. And you just have a portal. You just have all your quarterly reports or asset management stuff in the portal. And what's nice about investor portals, which I think all of us at this point are on board with it and are fans of the technology, but if you're making distributions out of the portal and all that stuff, then investor logs in, they can see, oh, well, this is the distribution for this month, here are the monthly financials, all that stuff's just centralized. So that's really great. So Jack's asking, what's our process for picking the right investor portal? That's a great question. I do not know. We have experience with a few, and we might be transitioning to another one shortly. So we're learning ourselves. I think budget is a factor for sure, because the price ranges dramatically. And today, the deviation in capabilities has decreased. Right, all the platforms have gotten more sophisticated and have kind of caught up to each other in terms of functionality. So there's not a huge variance. I would say the variances are going to come from customer service and from user experience, both on the sponsor side and the investor side, which I think the user experience on the investor side is very important. But yeah, so that's what I would say. Mendy asks, is the investor portal connected to our books? No, you have to. So just to kind of walk through how that works for us, at least, if we're going to update the portal with monthly financials, right, we're just going to take our PDF that we get from our accounting company and boom, upload that. That's the financial report for that month available in the portal. And then as far as actually making distributions, we do batch ACH. So, the portal we decide, okay, here's how much we want to distribute for this month. Maybe it's $40,000 in total, right? And the portal has everyone's capital account there. So we know, okay, out of that 40,000, percent of it's going here, there, and there. And it just, the portal automatically chops it all up based on investors' capital account and then generates a NACHA file. And then we can upload that to our bank at Chase. And then that shoots out these batch ACHs, and we just make distributions to all the investors. There's many ways to do that, and some are just more manual than others. And so that's kind of one of the superior functions of some of the portals where some don't support distributions or bulk ACH like that. Some do, and then some do it in a more streamlined fashion than others. I would say that's very important for me. I'm a big fan of monthly distributions. I think if you can, provide 12 times that you're sending money to your investors, making them feel good, that's way better than doing it 4 times per year. So you have to have the infrastructure in place to be able to actually handle that and not take up all your time. Okay, well, yeah, at this point, we're just, obviously getting off topic, but these are all good good topic. So if anyone else has any questions, please just unmute yourself or put it in the chat. And otherwise we'll just hang out for a few more minutes and we can sign off early today.
Hey, Rob, if you don't have access to the CoStar, I know you guys do, but what are some other market research tools that you use besides CoStar that you would add to your folder? Like census reports, something like that, or is CoStar your main source?
Yeah, CoStar is just kind of a catch-all and, just standard. But as far as what we use that's free and not, as far as what we use is free, we use justicemap.org. And that is, we use that for demographic data, income data. And that's a really great way to just type in an address and boom, get a good sense of a location, neighborhood, and kind of comparing the property's demographics to its comps. And, because property could just be down the street, but it's not a true comp because, the incomes over there are completely different or what have you. So it's a great way to visually and numerically see the data. So, and that's completely free. So that's, other than that, I mean, we're heavily into CoStar. We've had Yardi before. We're potentially thinking about switching again, but none of the data providers are perfect. So you kind of have to always back your research with just, old-fashioned Google or calling. Okay, so Mark sent in a question about loans going to bridge and what needs to happen for us to go Freddie Floater, or where Freddie Floater no longer makes sense. So kind of basically making a decision between permanent debt or bridge debt and where it makes sense for us. So kind of there's a few metrics for us there as far as when we determine, okay, this deal is going to go into our Freddie Floater strategy, or this is going to be a bridge. And then sometimes you're just forced by one overwhelming thing, such as the property being 80% occupied, because in that case you have to go bridge. But so one of the things for me is I never want to be below 70% loan to cost if I can help it. Not 70% loan to value, but loan to cost. And obviously if you have a big CapEx budget, then that'll be pretty tough if you're getting a 75 or 70%. If you're getting a 70% LTV loan, right, you're automatically going to be below 70% loan to cost. So basically what I'm saying is I need 75% LTV. And, but the problem is let's say a deal has just, thin cap rate. And so therefore it doesn't size to a 75% LTV. It only sizes to 70% LTV. That doesn't mean we're just going to rush to do a bridge loan on that deal, because it may not justify a bridge loan, right? Just adding more leverage without justifying it doesn't make sense, right? It's just adding risk. We have to justify the bridge loan by actually having a strong enough business plan that the value of the property is increasing enough to where that additional leverage from the bridge loan and the shorter timeline on the bridge loan is actually justified, and we can actually refi out of that bridge loan into a 75% or a 70% LTV loan safely, comfortably, right? So I actually just made a video about an hour ago about this topic, just because I'm seeing all these Class A deals go to bridge because they don't want to do 60-65% leverage. But if you have a stabilized Class A deal and you're going bridge, what's your takeout? You're not going to value add it and then being able to refi at 75%. So people, evidently, borrowers and lenders are both just banking on rent growth, appreciation, cap rate compression, right? To just keep that going and not have any issues there. So in my opinion, this is bad for the market, because lenders are abetting buyers to bid more and to let prices go higher, because they're fueling it with added leverage from bridge loans. which is, creating undue risk in the market. It's not a huge issue. I mean, at the end of the day, bridge lenders are still pretty conservative and underwriting, reasonably, but it's definitely not ideal in my opinion. So yeah, thanks for that question about that.